with rising interest rates and inflation and maybe a recession and mortgage rates are going higher, how can people buy a home right now? That's what I'm talking about today. Stick around. Hi, welcome back. My name is Joe Brown. I'm a realtor with Century 21 List with Beggins, located in South Tampa. Thank you so much for being here with me today. So I'm going to refer a lot to last week's episode. And so at the end of this video, I'll put a link to that video so you can go watch it. Because I talk about a lot of the economic pressures that we're under right now, right? Rising inflation, possibly a recession, and what it might mean for the housing market. But I've said several times that people, especially renters, are caught in, if you want to call it the perfect storm, but if it's really not good, is it perfect, right? Their rent is going up. I talked to a gentleman the other day. He says, you know, Joe, I think I'll just move into a homeless shelter and save my money for a few months. That's how desperate people are getting because rents are going up. So they say, I want to buy a home. Well, interest rates are going up. In fact, I saw today, interest rates jumped 0.5% in 1 week. It went from 5.2 to 5.7. That's a big jump. So, and again, in last week's video, I talked about how mortgage rates are tied to the 10-year Treasury. So if you haven't already, go back and start watching that 10-year Treasury. Start tracking it daily. I will tell you, yesterday it dropped. So I'll be interested to see what happens today if it drops, because if it keeps dropping, then we can maybe think interest rates may drop next week. Only time will tell, right? But people are stuck. People want to buy a house. Interest rates are going up. So what are some options? Well, option number one is what's called an ARM, an adjustable rate mortgage. And this goes to the lending. So we know a conventional loan is a 30-year fixed. So I just told you it was 5.72, right? So you go in, you lock in the loan, and you pay 5.72 for 30 years. The payments stay the same for 32 years, unless taxes change or insurance changes, but the principal and interest stays the same for 30 years. Well, you could look at an ARM, an adjustable rate mortgage. What are the benefits of that? Sometimes the interest rate starts lower. So instead of a 5.7, maybe it starts at a 5.1. But adjustable rate mortgages are all over the place. And I want to show you this graph here because you need to understand how to read an adjustable rate mortgage. So here's the graph, and you'll see it says 10-1 or 7-1, right? So what that means is the rate that you get. So let's say it's a 5.2. That 5.2 stays in place for the first 7 years. So the first number, where it says 5 or 7 or 10, is the amount of time where that first rate is in place. The second number is how often the rate can change. So you'll see in this example, it says 7-1. So the rate stays in place for 7 years, but then after that, it can change each year. Now, that's scary for some people. And that's why when interest rates were like a 2.6 or 2.7, nobody was talking about adjustable rate interest because nobody wanted the chance that it could change. Well, take a look at these other numbers next to the 7-1. the 5-5. So what that means is within the first year, the most it can change is 5%, right? That's scary, isn't it? But the first year, 5%. After that, the most it can change is 2% a year. However, the last 5 is the most it can change over the life of the loan. Okay, so the first 7 years, and this policy kicks in and says, okay, we're going to raise it 5%. Well, you've reached the max. It can't go up anymore. So you're then stuck, fixed at that rate for the rest of the loan. Take a look at this second example, 10-6. So what that means is the first 10 years, the rate is fixed for 10 years. But then after that, the rate can adjust every 6 months, right? That's what the 6 means, every 6 months. So it's important to understand how to read these. Now, what you could always do is go in, get an adjustable rate mortgage. So let's say right now it's a 5.2. If it goes up and goes up after 7 years, 5 years, so maybe you're now at 8 or 9%, and interest rates have dropped to 4%. Well, at that point, you can refinance and get back to a conventional fixed rate. However, the adjustable rate mortgage, because sometimes they're lower than conventional rates right now, you can get in at a lower rate. Now, I need to emphasize that sometimes it's a lower rate. And this is going to branch off into 2 different directions, so stick with me. I spoke to somebody yesterday who said their conventional 30-year fixed was lower than the adjustable rate mortgage. I talked to another mortgage banker who said their adjustable rate mortgage was lower than the conventional fixed mortgage, but you had to pay points. Do you know what points means? So let's say it's a $300,000 loan and you have to pay 5.5%. However, you could pay 1 point and take it down to 5.2%. Well, 1 point is 1% of the loan price. So $300,000 loan, paid $3,000 to get the lower rate. Now, I just made those numbers up, so don't quote me on that. So here's where the divergence is. So number 1, the rates, the ARM is not always cheaper than conventional. And number 2, I know that's a 1, but there's the divergent. Number 2, you have to shop lenders because lenders are different. The second mortgage banker I talked to, his ARM was cheaper than the conventional mortgage, but you had to pay points. The first guy I talked to, you didn't have to pay points for the ARM, but his rate was lower or higher than the conventional 30 days. So listen, just don't go to one banker or one bank or one mortgage lender and say, this is what I want, this is who I'm dealing with. It is to your benefit to shop different mortgages. And I'm reminded, I did a video several months ago on the different types of mortgages. And I'll put a link to that here. And if you're not familiar with mortgages and different types, it'd be worth you to watch that, okay? And here's second thing I talked about with the the adjustable rate mortgage. If it goes up 8-9% and mortgage rates drop, you can refinance. Well, the same is true with a conventional 30-year fix. So if the 30-year fix right now is a 5.7, Well, you can lock in at 5.7. Let's say it even goes to 7, right? Even at 7%, you lock in for 30 years. And if rates drop to 4, 4.5, you can refinance, right? So that's always an option. But just because you take a mortgage rate at 5.7 or 7, or if those of you as old as I am back late 70s, early 80s, people were taking mortgages at 18% and they were happy with it. Okay? So you have the option to refinance. However, and here's some great news, the state of Florida passed a program called the Hometown Heroes Program. And this is a program to help people in service industries get into a house. So you have to be a first-time home buyer. So what does that mean? First-time home buyer means you cannot have owned a home in the past 3 years. So maybe you owned a home 5 years ago and sold it and have been renting for the past 5 years. Well, you would be considered a first-time home buyer. And this program says you can take 5% of the sales price, 5%, up to a maximum of $25,000. So you're looking at a $500,000 loan value, right? $500,000, 5% is $25,000. And you can take that $25,000 and apply it to either your down payment or your closing costs. It can be split, right? Now, that 5%, whether it's $15,000, $25,000, it becomes a second mortgage, right? So you have your regular mortgage. So let's say you take $400,000 mortgage. $20,000, that's 5%, $20,000 can go towards the down payment and it can go towards closing costs. You have that $400,000 loan. The $20,000 becomes a second mortgage. And so once you sell the house or refinance, you pay that $20,000 back. It's not like we're giving you $20,000, but it's there to help you get into a house. Now, average says if you buy a good home and hold it long enough, the home is going to appreciate. This past year, homes appreciated 30% in Hillsborough County. We're expecting maybe 8% this year, right? Average, I talked about this last week, normal is about 3 or 4%. So if you own the home long enough, if you sell it, if you refinance, you should have enough equity to pay off the first mortgage and the second mortgage. So who qualifies? Who qualifies as a hometown hero? And I tell you, it's a 5-page document. And I'll put a link to in my show notes below, so be sure to check that out. Or you can go and just Google Florida Hometown Heroes Program, and it gives you the list. But it's people in service industries. So who are in service industries? Well, certainly the law enforcement, and that's just not police officers or sheriffs. It's people working in the jails and probation offices, juvenile delinquent centers. You have the firefighters and paramedics. You have K-12 teachers and teachers' aides. You have child care workers and people who own child care programs. You have the full range of medical. You have dentists, ophthalmologists, opticians. You have nurses, nurse practitioners, people working in the hospitals. You have occupational therapists, physical therapists. My daughter's a physical therapist. I want to talk to her about this program. So it is a full range of service industry in Florida that can qualify for this 5%. It's really a wonderful program. It's good for active service military and for veterans, right? So if you're active service moving in, Yeah, and it can be used with VA loans and FHA loans, right? So it's not, you don't have to use a particular lender. It's just open to people to help people with their get into the new home. So it's really a great program. Look for a link in the show notes below to the different occupations. I hope you found this information useful. Please check out, as I said, I'm going to put a link at the end of this video to the video I did last week on the economy. I'll also put a link to the May, what month are we in? To the May market report, just so you can see where we are. I thank you for being here and sharing this time with me. I love sharing this information with you because South Tampa, Florida living is awesome.